Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be showing you one of the indicators which for the last 12 years has been over 90% accurate in predicting buy signals in this market. And I'll also go through the 60-day cycle because we've now come to the end of the actual 60-day cycle and show you exactly where we are and why the next 4 or 5 days are absolutely critical. I'm also going to show you the pi cycle and why, if we can come up to a certain level on the pi cycle, that will really end the current bear market. And finally, I'm going to give you the levels to look out for, that if the current trend going to the upside continues, then where is the levels that we should really be looking at. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. As usual, before I begin, the usual polite reminder, please remember everything in my videos is just for purposes of education. Nothing should be taken as financial advice. So please do your wider research before you make any important investment decisions. So with that out of the way, I'm going to be starting off with this quotation here from George Bernard Shaw. And what he said was, there are two things that will define you. And this is very relevant to the Bitcoin price and the crypto market, as well as in our wider life. And you can use this in however way you want to, but it allows us to focus on this particular quality, and that is your patience when you have nothing and your attitude when you have everything. So what he's saying is that two things will define you: your patience when you have nothing and your attitude when you have everything. And if we want to make it relevant to the Bitcoin price, what it's really referring to is your attitude over here. There's not many people who got out over here and are now getting in at these low levels over here. There's very few people. Majority of people have ridden this down because at this point everybody was expecting this to happen, to go much further up. And we all know what our individual attitudes were when the price came down here and started to make a higher high over here, and what we've all done by riding the price all the way down to these levels here. And it's very important now that whatever we've done when we had everything, our attitude when we had everything over here, whatever we did there, what we've got to do is not be affected by this, by the psychology, and to make sure that our patience that we've had down here so far, we've been extremely patient, waiting for certain levels, waiting for the market to bottom out over here. We've got to let our patience be rewarded over here. And I'm going to go through some of the analysis of what I think is developing here so that we can actually have a good insight into what may develop on the Bitcoin price over here. Okay, so I'm going to start off on the weekly chart of the BLX Bitcoin price action here. And what I want to bring to your attention is this signal that is just about to flash. And we must take heed of this because of this particular trend with this signal here. The reason why we need to take heed of this signal is because when we look at, whenever we get this signal to be flashing, this is what normally happens to the Bitcoin price. And the first time we got that signal was around about January 2012. And the price action had just gone up over here. And although the price initially went down, but really that was the start of this bull market over here. And in between, we got another signal at the bottom of that channel there. And then finally, we got another signal here just before we had the parabolic rise to those levels there. So all three signals here were absolutely accurate in predicting a very big rise to these levels here, as long as people were able to be patient. So if you'd have followed these three signals and continued with them, you could have gone all the way up to these levels here. And that was the end of the bull market of the first cycle at the end of 2013. And the next time we got these signals, as you can see, they were at the bottom where the bear market was. So at the end of the next bear market down here, we got our first signal back here. And once again, there was a little bit of a fall off, but if you'd have carried on and persisted and been patient, all this patience here was signaled by these 3 buy signals down here on the hash ribbons. And we would have been handsomely rewarded, because what happened with these three signals over here at the bottom of this bear market that was the start of the next bull market all the way up to the $20,000 mark here, and that was at 19,800. If we continue further, we can see here that at the end of that bear market we got one more signal down here, and this was around about the $4,000 mark over here. Once again, it's right at the bottom of that bear market, and if we were able to be patient for the next few weeks and months, this is what it would have culminated in, and you just hold through that. Then we got a series of three more buy signals here initially, which included the COVID situation over here. But once we had negotiated that, there was a further fourth signal here at the beginning of the big rise all the way up to 64,000 here. So once again, these series of signals were marking the beginning of the trend towards the upside for the following bull market, which now brings us to the current situation over here. So these four were the signals that we'd got before we actually topped off at the $64,000 mark here. And then after that, we got a further buy signal, which was again taking into account this rise over here. And this is where we topped off. And this is where people may have made the mistake of taking this signal and thinking that it's going to go much further. And certainly that was my thinking as well at that time, I remember. So what we've now got currently, we haven't got that signal yet, but we are about to print that signal. If we move this down, you'll notice that these blue dots normally come at the end of the capitulation over here, these red bits here. So when we come to the end of the red bit here, you get a buy signal, red bit, buy signal, red bit, buy signal, etc. So we're coming to the end of the red bit over here. Pull it up a bit. So if you have a closer look, you can see that the red capitulation is about to close here. When that closes in the next week or two, then we will get a blue buy signal here. As I showed you in the last video, whenever we come and break this trend line at the end of the bear market, this is where the action starts happening. This is what happened in the previous bear market end here. And if you look further back, again, this is exactly what happened there. We got a blue buy signal and we broke out. Further back, blue signal, we broke out. So the question is, when we get this blue dot here very, very shortly, so let's wait and see, but certainly this is an important indicator which has been highly accurate over the last 12 years. Before I go into the 60-day cycle, I want to show you the dollar chart on the weekly time frame here. And the reason is, if you look at this candle, this gravestone doji candle, some people would call it an inverse hammer candle, very, very similar. The main thing to take away from this is that you can see quite clearly the long wick at the top, which means that higher prices are being rejected. And the trend that we started over here to the downside has a very high probability to continue over here. And that can only be good news for the stock markets as well as the crypto market. Okay, on with the 60-day cycle and what that's showing us now. If you've been following my channel in the last few months, you'll know that the current 60-day cycle started here, which had finished after day 63 from the previous cycle. And I've marked in the 60-day cycle, the red line here, and the midpoint, the 30-day here. And we established that because we topped out after the 30-day midpoint here, that this was now a right translated cycle. And that was very bullish, because that means less days for it to come back down here. Even though we had our targets at these levels, we came only $50 to this target with this point here, and this was after day 51, and at that point we would have expected the market to come back down into the 60-day cycle to whatever level it wanted to, and may even have come to challenge these points, these lower points at 15.4 and 15.5. However, as we can see, instead of doing that, the long wick at the bottom of this candle here was telling us a different story. And I remember mentioning this, saying that this candle is telling us that maybe the price is going to start moving to the upside here, and we must respect this candle here. And if you've been following me on Twitter in between my videos, you'll know that this was the candle here that I showed, which basically said quite clearly here that the Friday Bitcoin price closed on a bullish hammer candlestick, indicating a potential price reversal here to the upside while going into the weakest part of the 60-day cycle. And I went on to say that a break above this signal here signals an early end to the cycle and the start of a relief rally of a new cycle. So if you've been following me on that, you'll know that this was clearly indicated on this tweet here. And since then, and this is the candle over here on day 51, so as we started moving here, it's showing an early indication that we may well have bottomed out on day 51 with that candle there. Now, a word of caution here. If we go back to the previous cycle, the cycle ended at day 63. But if you count the number of days before that, we had topped out here at day 58. So from day 58 to 63, that's when we got the big fall with that FTX scandal. I'm not saying that's what's going to happen, but we must always remember that with the 60-day cycles, we have a flexibility of at least around about 5 or 6 days either side. And currently we're on day 61 here. This line should be over here actually there. So currently we're on day 61 here. So there's still an outside chance that what happened over here could still happen down here. We may get one more dump, having sucked a lot of people on this little ride here on this relief rally. So please be aware of that. So while we're making nice progress on this relief rally here, the market may well decide, especially when you look at these levels over here, if I take these boxes out to make it a little bit clearer. So while we may have had an early end to the cycle on day 51 here, we've gone through some of this resistance points at these levels here and along this way. There's a lot of resistance here, and we seem to have managed to get above it. But we know that once we do get above certain resistance points, the price may be a fake out and come back down to the downside here. But the next level is this level here at 17.4, based on this resistant point here and this one over here. So it does look likely at the moment that we're going to be coming to this resistant points at the 17.4, 17.5 level. And if we can manage to get above that, then we've got this 18.3 to negotiate over here. So for those of you looking for levels, if you want to be safe, you wait until the price gets above the 18.2, 18.3 level before going long. If you want to take an aggressive view, you may well have got in already here at the 17.1, 17.2 level. And for those who are still waiting, I want to take an early approach. Again, this was a level that you can easily get into if the price gets up to this level here at 17.4. But the levels to look out for a little bit further up, if we zoom out over here, we can see that if we do get above the 18.2, we should really get some sort of a pullback around these levels at 18.3 again. And it is a key level, as you can see, from all the support we got down here and the resistance we got here and here. So we should get some sort of a pullback, but if we don't and we go right the way through here, this is the level to look out for at this level, and that's at 21,400. But just above that level is this level here at 22.8. So 21.4 and 22.8 are the next levels to navigate for Bitcoin once we can get past this sea of resistance at 18.3. But each day as it passes, there is a less probability that we're going to go to the downside, and that more than likely, with a higher degree of probability, that we're now in the early part of the next 60-day cycle, and that should take us to the midpoint from this level here at day 51, which was at the 30th of December. So if you take 30 days on from there, at the end of January, we could well have another 2 or 3 more weeks of a rising market into the levels I've just given you. And the reason why this is quite powerful in terms of the Bitcoin price, we can see that all the 3 averages here, the 8 EMA, the blue line, the 21 EMA, the yellow line, and the 34 EMA, the white line, they've all converged around about the same point here. And the price has managed to get above that so far. So that is quite a bullish move. We're above the 8 EMA again, so the momentum is certainly to the upside, and the next port of call does appear to be this 18,300 mark here. So that looks very highly probable from where we are currently, based on some of these averages and what I've shown you earlier on. However, there is a word of caution, because when we look on the weekly chart, we can see quite clearly we're coming up to the 8 EMA now. We may have just got above it so far, but we have a habit of getting above it and getting rejected to the downside many times over here. and over here as well. So certainly there is a lot of resistance with the price, but it seems to be doing very, very well. Finally, I'm going to have a look at the pi cycle on the daily chart here. And I want to just bring to your attention what's actually happening with the price. As you can see, in the previous cycle, when we topped out here at 20,000, the price fell below the red line here. The red line here is the 111 simple daily moving average, and the green line is the 350. And these are very important because as the price came down, this is the line where we found a lot of resistance along the way before we finally broke out, and that was the end of the bear market signal, and we were on the up from there onwards. And currently, as you can see, we've been following exactly the same path. We topped out at all the critical points every time we came up to the 111, just along here. It's the same is happening over here. And currently, look what's happening. We're just coming up at the bottom of the bear market, slowly creeping up to the 111 daily moving average, just as we did over here. And once we get above it, that could well be the signal. If we have a closer look here, so currently the price is at 17,250 and this moving average is at 18,000. So once again, it's having a confluence of this line here at the 18.3. So we may well be just going sideways here, trying to work out a way to get above it. But once we do get above this line, then expect that to be a very strong signal that we've come to the end of the bear market here. Okay, so we'll leave it there for the time being. In the next video, I'm going to continue the theme of the Bitcoin miners report and exactly where we are in the portfolio and what's happening to the Bitcoin miners. So I hope you found value in this video, and if you did, then please do remember to like and subscribe if you haven't already done so. And if you have any comments, questions or suggestions, then leave them in the comments below. If you want to follow me on Twitter, then go to the link below every one of my videos. And if you click the link there, you'll have the opportunity to follow me on the Twitter page in between all my videos. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.